All right, good afternoon. All right, so it is Thursday, October 24th, 2024, approximately 1:28 p.m. Eastern Standard Time. And I wanted to bring you a quick update video, go over real quick the trade from yesterday, which was successful, and then show you today's trade, which was not successful. And I'm going to show you the logic behind it, and then why some analysis on why it ended up not being a successful trade at the time, and then what we're looking for the next setup. So without further ado, let's jump right into it. So as you can see, this is UJ, USDJPY, 1 hour chart, technical analysis, right? So the trade setup that we took from yesterday was this one right here. Remember, I told you I got involved in this trade in this 10 o'clock candle or what have you, and basically took it down. My TP was right here in this fair value gap, which it hit overnight. It hit looks like around 4 a.m. And so let's see the pip count. I think it was over 100 and something pips. So it got involved right there. No drawdown, as you can see, came down right there. So 108 pip, 108 pip move right there. All right. So that was a success. So good things popping and little things stopping. So as you can see, the market is actually still in a downtrend, right? I was actually looking to get involved, which I did. I was looking to get involved once price got into the fair value gap and started giving signs of buying. What I'm looking at continuation to the upside, because all this leg right here is just, in my opinion, just one big pullback, right? For the time being, unless it breaks this higher low right here. And then we're looking at a change in character. And we got market structure shift and stuff like that. So for right now, till we break this, we're still in an uptrend. And this is a higher low. So I'm still checking for buy opportunities from a higher low perspective, right? So what I did was I actually got involved with this trade right in here. So I'll show you. We're gonna go down to the 5 minute chart and take a look at where I got involved, what the logic was, and then where I got stopped. I can tell you now, I got stopped. By the time I got stopped out, it was actually, let me see. Yeah, it was probably right here. Boy, because I'm pretty sure this is where my stop loss was. It's like a 7 pip stop loss. So not a big loss or anything like that, but a loss nonetheless, right? But I'll show you what it looked like for the entry, and then again what we're looking for the next move, right? So let's go to the 5 minute. Okay, so everything was looking good. And on the technical analysis side of things, looked pretty decent. So came down to the 5 minute. Again, the rule of thumb. So the rule here for the entry, right, is what you want to see, or what you want to look for is you want you want price. So if we're looking for a buy, right? Um, you want price on the 5 minute. And this is just for your entry, right? For your entry, you want price to give you a higher high and then pull back and give you a higher low. And then you're looking to get involved in the higher low, right? For the continuation to the upside, right? Because what you're typically looking for is you're looking for that intention to say that the buyers are now stepping in and they're ready to move the market upward, right? So that's why you want to wait for that structure to be broken. So you want price to break a lower high, right, to the upside, and then pull back to give you that entry, right, a higher low, right? Again, because that higher low, so take, for instance, this higher low right here, right? Is basically telling you the story that it's telling is that the bears are not really there's very little supply, little to no supply left. So there's not a lot of interest in continuing to sell at these low prices, right? So the momentum for the bears starts to slow down. And then you see the break of the lower high, the break of structure to the upside is now telling us that the bulls have now stepped in to push the market up. But before we get involved, right, we want that intention to be tested, right? So that's tested by the pullback where we get a higher low, and then we get in on that continuation to the upside, right? That's the entry process. That's the entry process you want to follow. Now, what I did and why I got stopped out this morning is a great example of why you want to follow the more higher probability um, entry versus it's still a good entry, but it's not as high as a probability as waiting for the breaker structure and then the pullback to test that intention, right? So what I ended up doing was I got involved with the trade at this higher low, right? Now notice lower high to a higher low. So there was no break of structure to show intention first, right? But I got in. So I got in like right around here, right? Check me out. So I got in right around here, right? And I put my stop loss right here. That's what my stop loss was. So got involved here. Yep. And then stop loss here because this was the 8:30 candle and there was news that came out. And I saw that the market was already moving in my favor. So I went on and put my buy order in right there, stop loss right there. So let's see. So from the time I entered, which was like right here, right, it got as far as 40 pips, right? So 40 pips, right? Eventually, though, it ended up coming back and obviously stopping me out. Now, what I ended up doing was, because I did start to see a bit of weakness, price rejecting from this area right here. So an area of very little interest in the market. So what I did do is I ended up moving my stop loss to basically break even. I moved it to right here in hopes that it didn't get stopped out. But if I did get stopped out at that point, it wouldn't be a loss. So that's what I ended up doing a little bit later after seeing weakness, a couple of rejections to the upside. So that, kind of told me that the market wasn't really ready probably to, make that push to the upside. The other thing that I started to realize is that the yen had a lot of strength today. The yen was really overpowered today. Not that the dollar, wasn't didn't have strength, itself. The dollar actually, wasn't too bad, today. It's just that the yen overpowered, all of the other currencies today. So the yen was the better currency today, which is what led to the continued move to the downside in our pair here. Right. But again, the entry model, the entry process is to wait for that structure, that lower high to be broken, wait for that pullback, right? And get that higher low, right? And then get involved in that market. So if we had did that, we would have never gotten involved. I would have never gotten involved in that buy trade if I waited for that because that never happened, right? We got the breaker structure, right? We got the intention, but when that intention got tested, to the downside, it fell apart. So basically, that's what happened with that trade. Again, it was a break even, type of deal, but that was bad on me for not considering how strong the yen was, but also not following the full process. Well, I was a little aggressive this morning because I thought I was seeing what I analyzed. Everything looked good. It wasn't necessarily a bad trade. Again, it just wasn't a winning trade, and then it did not have all of the makings of a legit move to the upside. Again, see intention first, then test that intention with the pullback, then continuation. That's what we look for to get involved in the market. And it's okay to wait for that that verification on the 5 minute, you're not going to. The reason why a lot of people don't want to do that a lot of times is because we feel like we're missing out on a bunch of pips, by waiting for market structure to, give us that validation, right? Which in reality, you really aren't. You really aren't missing out on a lot of pips. You're actually saving yourself, some a little bit of stress and some financial difficulty by waiting. Yeah, do you miss out on a few pips? Yeah, but that's a drop in the bucket compared to what you can get, right? If you are patient. Let the market do what it's going to do, and then you make your move. So again, the entry process. So the next one we're looking for, right? Again, we already seen that on the hourly time frame. The UJ is still coming down. Yen is still is still showing strength. So we're gonna ride that out and see what that looks like. And then if we get the opportunity again, we'll go ahead and use the process. The process is again, right? We wait for that break of structure. We wait for that lower high to be broken, right? Wait for that pullback, right? So price should make a new high, right? Higher high, come back, make a higher low, and then we look to get in on that higher low because now that intention to the upside has now been tested and verified. And I feel more comfortable getting into that trade, right? So real quick, we're going to take a look at what the entry looked like yesterday. A little bit of the same type of entry that I got in today, but this one actually ended up going in my favor, which was great. We already seen the results of it, but again, let me show you the logic behind it, right? So price came down, created a higher low, right? From a higher high to a higher low. Then it created a lower high. Again, to me, I interpreted this as the market no longer being interested in buying and transacting in these in this high price area. So that was an indication that the momentum to the upside has now started to slow down. And then we see that we got the rejection there, and then a pullback, and then another rejection. And again, this is actually where I got involved in that sell trade yesterday. Got involved right after this red candle, put my sell order right there, and I actually put my stop loss right there, right? Very tight stop loss. I think it was all of, a couple of pips or what have you, right? So once I got involved, as you can see, never hit my stop loss, and I was able to ride that one out, to the target. So 100 and something pips, lost 7 pips today. I think I'm okay. I'm in a pretty good position. And at the same time, I got to be reminded that it makes more sense to follow the full step-by-step entry process and not to take any shortcuts, right? Look, sometimes we may get lucky, on that shortcut. Price may not come back and get us, right? But today the intention just wasn't there like we thought it was going to be. So we did take that L, and that's okay. That's absolutely okay because here's the deal. Taking the L is absolutely part of the process. It's part of the job, right? You're going to take a loss from time to time, and that is absolutely okay. If you think that you're going to get 100%, there's no 100% strategy. It does not exist. Stop chasing it. Doesn't work that way. That is not how the markets work, especially Forex, especially with Forex. Forex, you're not going to get 100% strategy, right? At best, what you can look to do, and I'll tell you this, statistically, the best currency traders in the world across the entire known globe, right, do probably about 70% at best. Have a pretty much a 70% win rate, right? The key, right, to being a profitable trader is being profitable. And you're profitable by your risk to reward, right? So when you lose a trade, you shouldn't be losing a whole lot of money, right? Look, count your losses. Get out the trade. If the trade isn't going your way, get out the trade. It's okay. Live the fight another day. Okay. Because you don't want to get caught up like majority of retail traders, and we're holding our losses, our losers, right? We hold our losers, and what do? We close our winners. We close our winners real quick because we got a little bit of money, right? I want to hurry up and close it before I lose it, right? But I'm losing a trade, and I'm gonna sit here and I'm gonna hold this baby. I'm gonna hold this because it's gonna come back. It's gonna come back, right? And how often does it really come back, right? It's okay. It's okay. Cut your losses. Cut your losses while they're small, and set it back up. Get ready for that big one. Again, the name of the game is managing. You have to manage your trades, manage your risk to reward. If you can conquer that, right, along with, analysis, entries, and all of that stuff, right? But again, if you really want to be a profitable and winning trader, right? It's about managing your risk to reward. A part of it is about managing your risk to reward. If you're not managing your risk to reward, then it really doesn't matter how many trades you win or lose. You're probably not going to be a profitable trader, right? Because you're probably doing what majority of retail traders do, and just what I just mentioned. You're holding on to your losers and you're cutting your winners off too early, right? And that's just indicative of not being confident in your skill set and what you're doing, right? But when you're confident, you can take an L, you can cut your losses quickly, and you can hold your winners. You can hold your winners because you have an idea what you're doing. You got that experience to understand that the market is going to, do what it's going to do, right? In Forex, nothing is guaranteed. Nothing is guaranteed, right? All we can do is do our best to analyze the market and get in where we fit in because we are not the ones that control the movement of the market. So our jobs are to interpret the data properly, right? And follow our steps to get in and ride the coattails of those that do control the market. That is pretty much all I have for you for today. I hope this has been helpful and meaningful to you. So hopefully we can all get in, follow the steps for entries and make some money. As always, good luck to you and happy trading.